Okay, well, welcome everyone. As you signed in, I'm sure you saw that this is being recorded. So I know there are a few people that had mentioned they weren't available at this time, but we'll go ahead and post it at the TIE Oregon website, and that way people can take a listen to it at their convenience. So first of all, I want to make sure I thank the sponsors for this webinar: City of Tigard, City of Wilsonville, City of Sherwood. Great to work with these folks, and I appreciate the webinar idea. And as always, I'd like to thank other organizations that are providing additional support, and that's Washington County, City of Hillsborough, City of Forest Grove, Oregon Community Foundation, TIE Oregon, as well as Virtue Lab. And with that, we'll get started. So topic today, supporting entrepreneurs in Washington County, but I'm going to be covering a lot of topics as well. So I'll give an overview of my Venture Catalyst role and the type of services I provide entrepreneurs in Washington County. And then I'm going to take some time to talk about equity financing. I think everyone on this call clearly understands debt or loan financing. The world of equity financing is sometimes a little unknown, strange. There's all sorts of probably different adjectives you could apply to that. And then at the very end, I also want to share what's going on with the West Side Pitch Competition. The other thing is, I'll mention, I always like to informally run these webinars. So as I'm talking, if you have a question, please post it in the chat room. And then Carrie Naoni from TIE Oregon is helping me with the webinar, and she'll interrupt me and ask that question. So feel free, if something pops up, to just go ahead and ask. Okay, so what is this role of Venture Catalyst? First, let me talk about the type of entrepreneurs that I support versus some of the other organizations in the area. I think as you look at, and these are general rules of thumb, I don't mean to make this absolute, but in general, if you look at SBDC, SCORE, Chambers of Commerce in your various cities, those organizations tend to serve small businesses. So what we call, Main Street entrepreneurs, Main Street businesses, as well as local service-based firms, like if you have an air conditioning business or something like that. When you look at both the city as well as Washington County, or really any county around Oregon, your economic development organizations, they tend to do classic economic development, either retention of existing businesses or expansion of those existing businesses, or recruiting more companies to come to their particular region. So that's typical within those ECDev managers. What I focus at, and colleagues of mine doing the work of Venture Catalyst, we focus on scalable traded sector startups. And you might hear this term, traded sector. So I put together a slide just to explain what that means, because oftentimes in this world, there's a vernacular that is uncommon to a lot of people. So again, feel free to ask me any questions. But usually the Venture Catalyst work in the early stages of a startup that's building has the potential to be a scalable, fast growth company. So I thought it might be helpful to actually give some examples of traded sector, just so it's a little more clear in your mind what that is. So it could be software, or honestly, a lot of people are coming up with great apps. It's consumer products, apparel. You can go down the list. Food and beverage, when it's food beyond, say, like a catering business. But if you've created, I don't know, a barbecue sauce or kettle potato chips, and you have a national or potentially international market, then that applies in terms of being traded sector. You often hear about high tech. or lately there's a lot of interesting things going on in Oregon regarding climate technology, whether that's wind or batteries. There's some great strides there. Bioscience is typically considered a traded sector because it goes beyond the boundaries of a city or state. And some services, like if you look at Airbnb, for example, they provide a service, rental homes, but it's at a national or international level. So what all of these companies or these sectors have in common is that the entrepreneurs are solving industry problems or needs within that particular industry, either at a national or international level. Okay, so now let me focus on venture catalysts and the key things that we try to do to help support the entrepreneurial ecosystem. First and foremost is supporting startups. So we'll meet one-on-one with entrepreneurs. It could be via Zoom call, it could be in person, and we'll understand their business. We'll help to do some coaching and mentoring. We'll network them to other key resources in the region, all to help them develop and grow their business. Another important objective of the Venture Catalyst is to manage what we call our assets. And assets are either mentors, and it could be a mentor either in a particular vertical, a particular market, or a particular function like accounting or finance or marketing. So we try to have what we call a stable of mentors to help support the entrepreneurs and provide them educated people in their particular market. Then we also put on events, pub talks that I do at Golden Valley, and as well as educational programs. So for example, this webinar, and during COVID, there were quite a few educational programs we did as free webinars just to try to give people more information about managing a business. And then the last thing we do is look at the infrastructure within the ecosystem and see if there's any gaps that might affect long-term success. So a gap, for example, might be if a lot of people that are food entrepreneurs come to me and say, hey, Laura, there's not enough commercial kitchens in Washington County for us to be able to develop our products, then I would go to the county or particular cities and talk to the economic development people and say, hey, would you consider investing in that particular resource? So that's just an example. And again, I welcome any comments within Washington County. If you feel like there's a gap or we're not providing enough resources in a particular area, please communicate to me. At the end of this talk, I have my email address, and I'd love to hear from you. Okay, so I thought it might be helpful too. Sometimes I feel like when we say, well, support startups or educational programs, it's nice to have some examples to help place exactly what we do. So I mentioned in terms of supporting the startups, we'll review business plans, but let me say, it is not my role to say good idea or bad idea. You need to figure that out on your end by, talking to people in the industry, talking to prospective customers. But what I'll do is ask some tough questions just to say, have you talked to any potential customers? Do you know who your competitors are? How are you going to get to market? So those are just some examples of things I'll do. So I'll work with you on your strategy. I can do some coaching on that end as well. And then a big part of my role is also to serve as a connector. So, there's industries where I really don't have a lot of expertise in that particular area. So I'll try to connect you to someone. There's also programs, whether it's incubators like the PI Incubator or accelerators. Oregon Startup Center is a great accelerator that's locally here in Washington County. And then I'll help you get investment ready. So I'll do, for those that are going after venture capital, I'll do pitch coaching, and then I can provide a warm introduction to everyone on the venture side of things. And so that is a nutshell what I do in terms of supporting startups. On the educational program side, I'll put on workshops. I'm actually going to do a webinar, which I'll mention again at the end, on pitch coaching or creating a compelling pitch deck, just so that people learn a bit more about the content and what makes a compelling pitch deck. And then I love these pub talks where I usually pull together a panel. So I'll get 3 or 4 people and we'll talk about a particular business topic. So raising capital is one, or how do you go about building a team if you're a startup? And one of the most popular ones that I did a few years back is learning from failure. And I got very successful entrepreneurs who built businesses, and you read about their exits in the newspaper. You never hear how tough it was at the very beginning. And so it's really great to hear from them. They have stood in your shoes, listen to what their struggles are, but then how they overcame them. So it's very inspirational. I look forward to doing that panel again sometime soon. And then on the infrastructure side, continuing to look for mentors who can help you in your particular business market, plus see, do we need more worker maker spaces? Do we need more industry cluster focus? Or a lot of the pitch competitions used to be just in downtown Portland, for focus more on Portland Metro, and we're trying to bring some of those things like pitch competitions out here to the west side. And again, I'm going to talk about that later, but we're continuing to explore new ideas. I love talking to people about new ideas, so please approach me if you have some. The other thing I want to emphasize with all of these, with the support that specifically providing the entrepreneurs, those services, support services, are provided at no cost to the entrepreneurs. All the online webinars are at no cost, and things like the pub talks, it's really nominal, $15. You get a great panel, you get appetizers, and you take care of your own beverages. But we really work hard to keep the costs low, and thanks to our sponsors, we're able to do that. But no, in terms of, reviewing business plans or discussing strategies, those sorts of things, there's no cost to the entrepreneurs in Washington County. And then one of the things I always like to share is I cannot do this job on my own. And I think I mentioned, I have experience in some areas, and my functional expertise is in marketing, and love to engage with people in that. But oftentimes entrepreneurs need more than that. And so there's great incubators and accelerators around town. I mentioned PI and the Oregon Startup Center. Virtue Lab has some things. Oregon Bioscience has an incubator. There's also great venture funds in Oregon that you can tap into, or if you're not interested in doing getting an equity investment, you just want to get a loan, there's also great organizations like Craft3 and MISO that work very closely with entrepreneurs and help them grow their businesses. And then beyond just what I do in terms of educational programs, there's lots of other organizations, OEN, TAO, TI Oregon, SBDC, I could go on and on. And what I do is just try to understand what you in particular need for your business and what you need to grow your business. And then I'll make some recommendations to you that hopefully you can follow up and see if they can help you out. And if not, always circle back with me. If I suggest something and it's just not a good fit, come back, because I might have some other ideas as well. So always feel free to circle back with me. the fantastic thing is beyond just my work as a venture catalyst, there, as I mentioned in that earlier slide, lots of partner organizations that'll help through all stages. So starting at concept, and oftentimes that's where I'll get involved, concept, early stages when people are just building their business, but really there's resources that can help entrepreneurs from that concept all the way through launch to some sort of exit. So what we've created is an entrepreneurial resource guide. I've put the website here at the bottom of the slide where you can find that particular resource guide in electronic format. And I'll send a follow-up email to everybody if you didn't have a chance to write this down, and I'll send the links because I have a few more links I want to share with you later on in the presentation. So, okay, so that's the role of the venture catalyst. Let me stop there. I see one comment in the chat room. So let me stop for a second just to see if anybody has any questions about my role as a venture catalyst. Okay, so I'm going to keep going. All right. So I'm going to focus now on the topic of raising capital that's often of keen interest to entrepreneurs. So let me start. Oops. Uh-oh. There we go. Let me start by saying there's basically 3 types of financing you can get for your business. One is grants. And that's just basically coming from friends and family. Some nonprofits offer grants. Business Oregon offers grants at various times. And a grant means someone's going to give you cash to help you run your business, but you're not required to pay back. So in a sense, it's like a gift or a grant, obviously. And you're not required to pay it back. You just funnel that into growing your business. The next type of financing is loans. Again, you're getting that cash up front, but you are required to pay back that loan with interest. And depending on where you get the money from, whether it's a bank or small business association, get an SBA loan, the interest varies, as well as the certain period of time that you have to repay that loan. And then the last type of financing I want to mention is equity. And so again, you're getting that cash up front, but what you do by accepting that cash for your business is you're going to give up a small portion of your company. So depending on how much money you bring in, that determines also how much of your company you're going to have to give up. And typically people that engage in equity investments are angel investors, so single angel investors, angel groups, venture capital firms. And what I thought I'd do is explain each of those so you've got a little bit more insight on who these people are. Okay, equity financing. So often you'll hear about startups getting equity financing, equity capital. Why is that versus some of these startups getting loans? Well, the reason is they typically don't have collateral. In the early stages, they often don't have any revenue, so no cash flow to help pay back a loan, for example. And oftentimes by nature of what they're doing, it's a very high risk, especially again in the early stages of starting a business. And so equity investors are here to provide the money, and they will give you the money in exchange for an ownership stake in the business. And since the business they're investing in is typically more risky than businesses that can, say, go to a bank and get a loan, they're also going to require high returns. So rather than getting, say, 8% interest on the money they've invested, they're looking for 3, 4, 5, 10x amount to get that money back versus what they've invested in the company. And they're expecting you to hit certain milestones, and banks do that as well, but they're expecting to see some high growth so they can get that high payback. To talk about the infamous funding ladder. And when I started my role as a venture catalyst nearly 5 years ago, this was the topic of one of my first webinars. And I had an entrepreneur come back to me 3 or 4 years later saying, Laura, one thing I remembered from that first webinar is it's really difficult to skip the rungs in the ladder. So you start out, and when you're like in the concept stage, so early in your development of your business, you're usually either self-funding it, what they call bootstrapping, which is self-funding and not pulling money in from other people, or you're hoping to get some from friends and family. And so that's the next step. So typically you explore a concept, and then you need to validate it. So you need to make what we call a minimum viable product that you can just get out there and say, hey, we've created this, we're gonna maybe add some more features, and you test it in the marketplace and get feedback, because that's gonna help you in terms of the development of your product. Some people, if they've been able to set aside a bit of money, can self-fund it, or they can just push through and keep that going. Or like I said, get grants or get money from friends and family. After you validate that in the market, and then you really start building your company. So now you're doing additional product development, you're adding people to your company, you're gonna need a larger amount of money. So what we call seed funds. And that you typically get from either angels or venture capitalists. Venture capitalists don't have money, unfortunately. Venture capitalists do have money. And some of the VC firms focus on early stage startups. And so that's where you can get that money. And then as you continue to grow, then you're going to go to larger venture capital firms and continue, depending on how much money you continue to need to funnel back into the business. You'll go what they call different rounds, which I'll talk about in just a second. And then the last piece is maturity, where either you exit and have an IPO and sell the business, or do a public offering, sorry, or you exit by somebody purchasing it. This pink area that you see there at the bottom, that's showing profitability, and people often refer to it as the valley of death, because you're trying to build a business, but you're losing money. And so you got to hurry up and build and launch so you can start making money. So there's a lot of tension, there's a lot of risk in that part. And that's typically when people fail, is in this explore, validate, build. Once you're launched and growing, then the likelihood of you failing is less. So that, in a nutshell, is the funding ladder. Any questions on that yet? Okay, I'm going to keep going. So I mentioned the investing stages. I think it's helpful to help frame them in terms of dollar amounts. And so I put together this slide to just, again, further explain what happens in the world of venture funding. At the pre-seed stage, I keep mentioning friends and family, angels. There is some crowdfunding. That's not as common for people trying to build traded sector businesses. Typically, crowdfunding isn't a path, but it's a possible path. The vehicle, again, is a loan, or you might hear the term convertible note. And so that's getting an equity stake in your business, but the convertible note is a debt instrument until it transfers over to an equity equity investment. And dollar framing of that is typically, again, these are just rules of thumb, not necessarily these are the ultimate numbers, but pre-seed stage somewhere around $10,000, $250,000. And what you use that initial money for is to develop your product and start getting some market traction. So that's what a lot of us talk about when you hear the term pre-seed stage. Now, the seed stage is a little bit further along where you're continuing to, you want to be more aggressive, say, add more distributors so you can reach more of the market, or you're developing it, you're wanting to bring people into the company to develop your team. That raise is typically between $250,000 and $1 million. And when you're talking about those kinds of funds, you're going to have to go to angel groups or these early stage venture capital firms to provide that level of investment into your company. And then once you get beyond the seed stage, you might hear about Series A, Series B, Series C. Basically, you're bringing in more money into your company from venture capital firms, typically over a couple of $1 million. And you've already validated your product or solution in the market, and now you want to go and grow. In order to do that, again, in terms of increasing your distribution, adding more products to your product line, etc., you want to bring in larger amounts of money, and the venture capital firms are the ones that can provide that. So angel investors, who are these nefarious angel investors? Typically, they are high net worth individuals that enjoy working with startups, and so they will give you some money. Now, anytime you take money from an angel investor or from any of the people I'm about to mention, just realize they're going to be looking for updates. They might give you advice, whether is welcome or not, in terms of running your business. So when it comes to equity investments, we always say, treat it like a marriage, because these folks are going to be with you for a while. And if you feel like you just really can't get along with this person or trust this person or something like that, I would say, do not take their money, because it's going to create a lot of headaches for you in the end. And so I've already talked about, they'll typically, because in the early stages, it's really difficult to value your company. So they get a convertible note, which is a debt instrument, and then they're expecting 18 to 24 months out, you're starting to generate revenue. You can now put some valuation on your company, and then that converts to an equity investment. Convertible notes, because they're debt instrument, they'll typically say, okay, you get 8% interest on your money, but they're not investing in you to get 8% on their money. They'd invest in the stock market if that's what they want to do. They're looking for multiples of their money, and this is why this is their rough time frame when they expect to see that conversion into equity, and on that time frame. And typically for the angels, it's less than 10 years. Sometimes the angels will, once they get an equity investment and you're raising Series A, sometimes they'll get out of the investment, or sometimes they'll go all the way to your required. It just depends on the individual angel investors. Always good to ask them about their expectations, just to make sure if you are taking their money, that you're delivering on their expectations. So those are individuals with net worth. There's also angel groups. Thai Oregon, for example, has their charter members, and they're a great angel group. And so those investors can invest individually, or they can invest as a group. The nice thing about angels forming a group is what we call deal flow. So they see more entrepreneurs rather than having entrepreneurs going out and individually finding people. If they go to a group, then they have visibility to a lot more deals that they potentially can invest in. So oftentimes they'll lean towards being a part of a group just so that they can see more exciting deals that are in the area. And depending on the group, they might focus on a specific industry like tech or geography, Pacific Northwest. Again, always good. I tell people, you know, as much as these groups or angels do due diligence on you, you should do due diligence on them, because you need to know where they like to invest. I mean, if you're a food entrepreneur, there's no sense going to an angel group that's focusing just on high technology, because they're not going to give you the money. They're going to be frustrated. You're going to be frustrated. They might not even talk to you. So understand who you're talking to, what we call investment thesis is, where they like to focus. And these angel groups will invest early, as we talked about, you know, in the seed stage, and typically up to Series A. And finally, the venture capital firms. So these are typically professionally managed firms. The range is pretty broad, from, you know, 10 million plus to over $1 billion. And so, so handling that amount of money and investing, it requires it to be professionally managed. And they're pulling in money from all sorts of different sources. So they'll provide capital to entrepreneurs in exchange for ownership, and it's typically private equity stakes. So you'll hear about private stock versus common stock. Venture capital typically gets the private stock, so that they'll have the first opportunity to get money back. Again, if you're acquired or you go public. Typically, venture capital firms, again, are targeting companies in the later stages. So they've launched, they're in the market, they commercialize their idea, and now they want to grow the business and carry it further. Typically, and again, these are just typical, you know, typical rules, but not necessarily cut and dry, just rules of thumb. They normally don't invest in startups. So that's where the angel investors and angel groups come in. It's highly risky. But again, with the angels and angel groups, they're willing to do that kind of investment for a multiple on their money. And venture capital also are looking for their multiple of their money. So again, make sure that you're talking to these people and understanding the expectations in terms when they want to get their money back. So you understand what you're getting into when you build this kind of business relationship. And then I made a list real quick of just some of the early stage seed funds that are investing in Oregon right now. You can easily Google this or search for this on any search engine and find the information. But I thought just a snapshot of who these funds are. You might have heard of them. Elevate Capital has the Inclusive Fund, and that's a great fund focusing on women, minority, veteran funded startups that often don't get access to venture capital money. So that's a great fund to look at. Cascade Seed Fund and Founders Pad are both in Central Oregon out of the Bend area. They're going to provide this pre-seed, early seed funding. Portland Seed Fund as by their name. They're a great fund developing companies both in Oregon and Pacific Northwest. And then the Rogue Ventures has a Rogue Women's Fund, also for early stage companies, for women-led businesses. So that's just a snapshot. If you want to learn more about later stage funds, I can talk to you about that too. But with the time left, and I want to make sure I do leave time if anybody has questions, I'd like to talk to you about the pitch competition. So we did our first Westside pitch competition last March in 2022, and it's backed by popular demand. We had about 100 people there, 6 companies pitched. We held it at the Walter Cultural Arts Center. If you've ever been to it, it's basically a converted church that's a great venue. It has a stage. We've got big round tables. Well, I'll talk about the venue some more in a minute. But we had a lot of fun, and it's a great way to meet fellow entrepreneurs. Angels are there, venture funds are there. In fact, the venture funds are typically the people that are going to judge the competition. We have city and county executives, as well as the general public attending. So it really is a lot of fun, and I'm happy to answer any questions on that. But let me tell you a little bit more about it. So what is it? It's a competition for early stage companies. So because those people typically have a tough time accessing money to begin with. So we wanted to give them an opportunity to get some visibility of their business and earn a little money and in-kind services. So in terms of who's eligible, it's any entrepreneur who either operates their business in Washington County or they live in Washington County. So if you're running a traded sector business, and again, I put some of those markets down below, and you have a unique product or service that's helping solve a problem or need in an industry, and that's serving a national or international market, then you're eligible. And let me also say, early stage companies, you're not from, the first month of launch, all of a sudden, I will say might be unlikely that, you're suddenly going to be engaged in a national, international market. So what I'm saying is your business can apply to a national or international market, and you're on your way. You have a business plan to say, I want to grow my business outside the city of Hillsborough, outside of Washington County, outside Pacific Northwest. I'm going to be a national brand. I have a national product or service, and that's what I'm intending to grow. So again, feel free to come back to me if you have any questions on eligibility. I also want to make sure you all are aware that the deadline to apply is a week from now, January 31st. So if you are interested in applying, just make sure you keep that deadline in mind. So in terms of the process, I wanted to share and be transparent on the process. So all of the applications are going to come in. I have a selection committee, so I am not involved in choosing the finalists, because in many cases, I know a lot of these entrepreneurs and I don't want to inject any bias into the process. So I have an independent selection committee. They're going to choose 6 finalists to compete. The wonderful thing is we've been able to raise enough money that we can up the ante for the first prize. Last year, it was $5,000. This year, it's going to be $7,500 for the first prize. Second place is $2,500. And then third place, you'll get access to legal services. And I think if any of you out there are, have hired a lawyer to do something, that can be quite expensive. And so that's valued at around $2,500. And Buchalter is a law firm that's going to provide that service. And they've dealt a lot with startups. So they're very educated in all aspects in all stages of a startup. But let me also say, you know, hey, if you're not ready to compete, or if you just want to watch a pitch competition and help cheer on these entrepreneurs, definitely want to welcome spectators. As I mentioned, last year we had close to 100 people. Tickets are only $20. And with that ticket, you get appetizers at the event, a couple beverage tokens, and you have a lot of fun. So I would like to encourage everybody to attend and pass the word around. These, we have an information page on the competition, and I know you can't link from this, as well as a link to the application and where to purchase the tickets. What I'll do is create an email to everyone that signed up for the for this webinar, and I'll in the follow-up. That way you have it. And I mentioned the cash prizes and the in-kind prizes as well. And we can't hold a competition like this without having fantastic sponsors. So Hillsborough, PGE, and Washington County have all stepped up as gold sponsors, and we have fantastic silver sponsors as well. Buckalter, City of Tigard, City of Tualatin, City of Beaverton, City of Sherwood, as well as Columbia Bank, which is a new sponsor for us this year. And Thai Oregon is great in terms of supporting us through many aspects of this, of the pitch competition. So again, I'll follow up with those links, and feel free to reach out to me if you have any questions. And with that, so here's my email address, laura@venturecatalyst.biz. And yeah, let's stop right now and see if anybody here on the webinar has any questions. Feel free to either put it in the chat room, or at this point, you can just unmute yourself and shout out. So feel free to do that, anybody. Okay, while you're thinking about questions, so what I'm planning to do in terms of a webinar next month is have an online workshop on creating compelling pitch decks. And so whether you've signed up for or applied for the pitch competition or not really doesn't matter. I'm just happy to share with you what I suggest in terms of content for a pitch deck. Everyone's going to give you an advice, and so I encourage you to, you know, listen to the advice, and then as an entrepreneur, you know, you're going to decide how you want to create that pitch deck. But sometimes it's helpful just to have at least a framework with how to pull one together, and I'm happy to share that. I haven't set the date yet, but I hope to include that also when I send out this email. So okay, I'll wait another minute or so, see if there's any questions. If not, that's totally fine. Again, feel free to reach out to me on my email, laura@venturecatalyst.biz. If you think of something later, I'll get back to you right away. And I appreciate your time this afternoon and look forward to seeing you at another webinar. So thank you so much. Take care and have a good rest of your afternoon.